No, no, we're talking about taxes right now. We can't play. I can't play with you right now. Hey, everybody, welcome back. You know what's one topic I won't be discussing at social gatherings this year? It's taxes, and I'm pretty sure it's the same for you. If you read some recent news headlines, you'll know that the US tax income brackets have been adjusted again for 2024. So, where better to talk about it than right here on my YouTube channel? In today's video, I hope to demystify some of that tax jargon for you. You ready? Now, first of all, what's an income tax? Income tax is a type of tax imposed by the government on income generated by businesses and individuals. For the purposes of our video today, we're going to talk about personal income taxes that the government levies from individuals from their wages, salaries, and other income. At this time, there are 7 federal income tax rates. Your taxable income and filing status determine which rates apply to you. The filing status are single, married, filing jointly, married filing separately, and head of household. But it's not that straightforward. The United States uses a progressive tax system, and simply put, it means that the government breaks our income into chunks or tax brackets, and each tax bracket is then taxed at a different tax rate. So how does it work? Well, let's say that the Money Auntie is in middle management and has a taxable income of $60,000 in 2023. Her filing status will be single. According to the 2023 tax bracket, the first $11,000 of her income will be taxed at 10%. Now, the difference between $11,001 and $44,725 will be taxed in the next tax bracket at 12%. And finally, the difference in her income between $44,726 and $60,000 will be taxed at 22%. In this example, with a taxable income of $60,000, the Money Auntie's marginal tax rate is 22%. The marginal tax rate is the tax rate paid on the last dollar of your taxable income, which typically equates to your highest tax bracket. However, because of the progressive tax system, the Money Auntie's effective tax rate is only 17%. The effective tax rate is calculated by adding the taxes paid at each bracket and dividing it by the total taxable income. Now, you've heard me mention taxable income several times in this video, and that's because in general, your annual income isn't always all taxable, and that's where tax deductions come in. There's a standard deduction for each type of filing status. For example, a single filer in 2023 has a standard tax deduction of $13,850. This is where having a good tax preparer or accountant is so valuable. They can help you find legitimate tax deductions which can be greater than your standard deduction. This, in turn, can significantly lower your taxable income. Other examples of tax deductions include mortgage interest, medical bills, or even charitable gifts, and each has specific guidelines. Speak to a knowledgeable tax preparer to make sure that you're getting your maximum deductions. The U.S. federal tax rate will remain the same until 2025 because of the Tax Cuts and Jobs Act of 2017. But the income thresholds that inform each tax bracket are adjusted generally every year to reflect the rate of inflation. In 2024, these are the new tax brackets. The standard tax deductions are also being increased. So for single filers, it's going up to $14,600. Now, if the Money Auntie stayed in her middle management job in 2024 and still made $60,000 in taxable income, her effective tax rate doesn't really change. It stays at 17%, but she will owe around $250 less in taxes. So that's it. I hope this video helped simplify some of that tax jargon. If you'd like to see a full list of the 2024 tax brackets, I included a link to the IRS website on my description below. I'd like to take this time to give a shout out to some of our community members who recently left comments on our videos. Crystal6483 said that she's going to try to track her spending and create a budget this month. That's so great to hear, Crystal. I wish you well in that. It's going to be exciting. Cocoon Cast Rebecca learned some money habits from Jay-Z, of all people, and she said it saved her so much stress and money. And Jay-Z's tip is that he never buys something unless he can buy it 2 or 3 times without going into debt. That's a hard one for some of us, including myself. I don't know that there are many things I can buy 2 or 3 times over. And the final comment is from Sandra Hool, 8090. I hope I pronounced your name right. She commented on the financial literacy for Gen Xers video, and she says that it was clever, beautiful, and clear. Such a succinct comment, and I appreciate it. Thank you all again for watching. Continue to comment. I love hearing from you. I love hearing your feedback. Please check out my other videos. Smash that like button, hit that subscribe button, and I'll see you in the next video. Until then, be kind and make smart choices.